Hi there and good evening. This is Scott at Scott Trades on Twitter and in the stockmarketmentor.com trading room. This is your strategy session for Tuesday, August the 15th, 2023. I hope you had a great day. A bit of a sleeper in the market today as we saw further downside, a lot of the downside pressure coming from the rise in the dollar and the rise in rates. And I won't get too deep into the weeds on why that stuff is happening, though we will talk a little about it. Some things to keep in mind for tomorrow. So we do have the FOMC minutes for the July meeting coming out tomorrow. We also have housing starts data coming out tomorrow. And then on Thursday, we have some jobs numbers to be aware of. And all of that, of course, is just part of the slew of data that the Federal Reserve is looking at in terms of what they might do for the FOMC meeting coming in September. And I apologize if my voice is getting a little crackly. I'm getting a bit of a summer cold, evidently. Okay, so we did get a bit of a gap fill to the downside here. You know, I had talked about this level being a potential target for the market. We did have a gap up. It ran nicely, and now we've kind of filled that to the downside. Unfortunately, tonight closing under that 50-day moving average. Now, as a swing trader, a lot of my best trading happens when the market holds above that 21-day. That's the gray line here on the chart. So I haven't really done much of anything. It's been a lot of reading, a lot of sitting on my hands, a lot of, just kind of market surveillance, as things happen, watching the headlines, posting things in the forum, posting things on Telegram, etc. Just trying to stay in flow with what's happening. Not doing too much day trading. I typically am not a great day trader just because I can get easily distracted with the other aspects of my job here at Stock Market Mentor. So I tend not to do a lot of day trading. So right now I'm just kind of sitting here, not doing much of anything. I'm watching things. I'm kind of building my list, my watch list and stuff like that, and just waiting for the market to cooperate. One thing that kind of made me a little hesitant to do much of anything yesterday was the volume. We had a nice up day yesterday. As you can see here, really nice. But it came on low volume. And now we have bearish engulfing candlestick closing under the 50-day, coming on higher volume. So it looks like for now the sellers are still in control, and we have to wait for that trend to change. QQQ also looking like a bit of a channel here. This one has just kind of been drifting down and to the right, closing under the 50-day moving average for the second time in just a few days here. Again, not a good look for the market overall. Now, with any pessimism, we do have to keep an open mind because things can change quickly, as we've seen. And so we always want to, in my opinion, though there isn't much to do, in my opinion, today, we still want to be building those watch lists. We still want to make a list of stocks that we like, companies that we like, and look for them to find support around clear moving averages. So, if you're looking at a company like Unity, for example, and I just picked this one at random for no reason, maybe you missed this move off of the Apple news and you were like, oh, I'm waiting for a pullback, and then you just kind of watched it go higher without you. Well, now it is pulling back. And so that's the open-mindedness that I want to keep in terms of some of these stocks. Maybe we just get a retest of these moving averages and a retest of the breakout zones. It is typical for stocks to retest breakout zones within the confines of a bull market. That happens. And so maybe that's something that's happening now. I can't guarantee that, obviously. I know as much as you do in terms of what the future holds. But that's kind of what is keeping me open-minded, is that we are seeing some stocks come back to some of these key moving averages. And now it's just a matter of, do they hold in? Does this come back down to to this level here? Let's look at the breakout level. This just for, random sake. Does this come back to 32.85? And if it does it hold there? And does it bounce off of that level? And so these are some of the stocks that I'm, just kind of watching. PLTR, that's another one just off the top of my head. It broke under the 50-day moving average. You can say this is a bit of a potential bear flag here. Or maybe it fixes itself and gets back above the 50-day. Entirely possible. This is one that I missed, and I know a few people did miss this one. So this is one that I'm watching for a potential, support zone to build around some key moving averages. So that's what I'm talking about in terms of building your watch list. Just get a list of stocks that you liked. Maybe you missed their move, and then just kind of track them and see if they do hold in and around some of those key moving averages. Then, if they do take off, you're ready and you don't feel late to the party. Dan asked a great question the other day in terms of what you, as a member, maybe struggle with in your trading. There's a lot of great answers. And some people said, kind of feeling late to the party. I feel like I missed the stocks, missed the move. The stock moves up without me, that kind of thing. And one way you can get away from that is really just by tracking these stocks, just by looking at it every day. Don't look for reasons to buy. Come from a neutral place. Look at it as if you don't care whether it's a buy or a sell. You're just looking at it going, okay, what is the chart doing? What is the story that the stock is telling me right now? And maybe this isn't a bear flag. Maybe this is a base building. Again, we don't know, but if you can annotate your charts and just kind of tell yourself what you think about that stock and about that chart, and then you see it, maybe we got a nice bounce coming off volume. Well, aren't you glad you kept it on your watch list? Aren't you glad you looked at it every day and fixed your annotation? Said, oh, you know what? Maybe I'll look at it on an hourly chart. Oh, you know what? That actually doesn't look like it works here. Okay, what does work here? And then you're just playing around with it. So that's, an aspect of trading that it doesn't happen when the market's, it can happen when the market's going, but obviously, prices can fluctuate. So maybe your envisioning lines don't really hold up. But I like to do it when the market's closed, because then again, I can look at it from an objective mindset and I'm not worried about all the other stocks on my list. I don't care what all these are doing, because I'm focused on, just trying to figure out the story of the chart right in front of me. And so doing this kind of stuff after hours or even on the weekend, I find is really powerful. So that's what I would recommend in this market. Just look for stocks that you like. Maybe you like them for a fundamental reason. Maybe they have good earnings, whatever it might be. And then look for them to come into some of these support zones and then see if they hold. See if the market buys them. And if they do, then you're ready, you're positioned, and you're following that signal. So hopefully that's helpful. Okay, so the dollar is ripping here. This is UUP. I do have a chart of DXY as well. I kind of like the chart of DXY better. I'm going to bring it in here really quick. Just watching some of these currencies, and the strength of the dollar has really, let me fix it up here. The strength of the dollar has really put pressure on the market. We are getting a lot of weakness coming out of Japan, and this is the Japanese yen versus the US dollar. You can just see how much it's fallen, even just since the beginning of, or the middle of July here. It's just, really fallen down, and that has helped to strengthen the American dollar. You can see it here. You see the inverse move from the Japanese yen. It's pretty much identical. And so that, in my opinion, is something that is putting a lot of pressure on risk assets right now, because that is, strengthen the dollar is not good for risk assets. And we learned that all throughout 2022. If you were trading with us during that time, that was something that was a topic of conversation almost every day, talking about the strength of the dollar and then trading the weakness. When you'd see the weakness in the dollar, you'd see stocks kind of pop up a bit. And, recently we've seen the dollar chop around. And at one point, I thought it was really going to break down. Like, it did break down. And then since then, we've kind of had this sharp rebound. You can see how we're just kind of at this level of resistance. So it's going to be interesting to see what happens if we break out of this zone, maybe retest the 104 level, or even come up here and test 105, 106. And if that happens, then I think we're going to get the inverse in the market, where we see lower lows here and the market test some of these lower ranges on both the SPY and the Qs. Meanwhile, rates keep making higher highs as well. This is the 10-year, still in a strong uptrend. It's been trending up since June. It did look like it was going to break down. It didn't. And now we're still getting that narrative in the market of rates higher for longer, based on just the economic data that we're getting. So it'll be interesting to see what happens. Doesn't mean that stocks can't go up in a rising interest rate environment. I've seen many historical charts where we do see high interest rates, but then we also see the market kind of brush that off and continue to march higher. So I don't want to say just because rates are up that the stock market is going to be down. That's not the case, because we've seen that here where, June, July, May, June, July, we saw rates come up, but the stock market didn't really care. May, June, July, what did the stock market do? But it is just one of those things to keep in mind of what could be putting more pressure on risk assets and on things like precious metals. Gold is down here near the 200-day moving average. Definitely not an inflation hedge. And I think you can say the same for Bitcoin for that matter. But again, this is an interesting spot. Okay, does gold find buyers here? We had a lot of hype in terms of the banking failures, and gold rallied, and it has since given back all of those moves and come back to almost fill all of these gaps to the downside. I do think that 173.92 level, it could come down here and fill that gap to the downside. We will see if it does that, but it is interesting that it's coming back to the 200-day moving average. And the question now is, do the buyers show up, or do they let this market fall through? Now, one thing that I've been watching really closely lately is Bitcoin. So Bitcoin is holding up actually okay here. This is GBTC. It's the Grayscale Bitcoin Trust. And today we were supposed to get an answer from the SEC about conversion for the Bitcoin the Grayscale Bitcoin Trust here from a trust to an actual spot ETF. We didn't even get anything from it, but that doesn't mean that the story's over. We may get something later in the week. It does seem like Henry made a good point today. It seems like they're just kicking the can down the road. I did see some chatter saying, well, they'll probably approve them all at the same time in 2024. Maybe, but maybe not. So we'll have to see. That there are just a handful of court cases of people suing the SEC as well for not approving some of these ETFs. The reason that the SEC has given was, well, because that market can be easily manipulated, we don't want to give a spot Bitcoin ETF. Well, okay. Well, now BlackRock is looking for one, and they seem to be lined up to get one. So, okay. I don't know if that excuse really holds any water right now. So, it is something that I'm watching. I think if we do get word of that, then we're going to see, Bitcoin and the crypto stocks and GBTC here really kind of, work to the upside. BITO is another way to look at this, but it's just kind of not doing much lately. Under all the major moving averages, except for the 200-day. No real trade here, but again, just something to watch. The Ethereum Trust, Grayscale Ethereum Trust, is holding up, okay. It's still at the 21-day moving average here. That's the gray line on the chart. But again, just hasn't really been doing much of anything, just going sideways and just, marking time right now, as Dan would say. So this, again, I think it's something worth watching. I don't think it's actionable. I think you want to wait for strength. But right now, again, just kind of marking time. This is XHB. There's been a lot of home building material stocks that have held up really well in this market. We'll look at a few of them here tonight. XHB just kind of going sideways, still holding the 21-day. Let's look at the hourly chart. Yeah, a little bit of selling, more selling than buying today, looks like, in terms of the aggressiveness of the side. So you can see the big kind of red bar here. Big red bar selling, big red bar selling, tiny buying bars. Sellers are more aggressive right now in this market. This is something that kind of surprised me today. We had been talking about a second wave of inflation, but we got news that China cut their interest rates. Not the first time that they've done it, but it is another signal of China slowing down. Now, if that happens, we may see a fall in commodities because it shows, essentially the engine of the world, the place that makes a lot of things that go around this world is slowing down because orders are slowing down. And so that could mean that the price of commodities drop. And so we saw a bit of that today. The thing that really catches my attention is how heavy the volume was. I mean, this is heavy selling volume. This is more selling volume than this stock has had in a long time, since back in late December here. So yeah, that is interesting to me, and it also coincides with some heavy selling here in XLE. Again, if China is slowing down, that means businesses are potentially not ordering as many things going forward, and then that could turn into a slowdown of our economy here. But so far, that hasn't really shown its head, as we did get some positive retail numbers out today. ARKK under the 100 EMA, that's the black line on the chart. Again, this doesn't look actionable here. It looks like a pretty heavy sell-off. So, again, I'm just patient in this market. Okay, what is this doing? Maybe you missed out on ARKK on the way up here. Now we just need to watch to see if it becomes buyable. And you'll know, because you'll see a nice big green bar and nice big green volume signaling, the buyers are back in control. Right now, doesn't look like it. Okay, let's look at some stacks. Start things off with Adobe. So Adobe's actually holding up okay. It's near the 21-day EMA. Upside reversal yesterday. The market pulled back. The Qs pulled back. Adobe held in tight. So again, this is one that I think is worth watching. Doesn't mean it's actionable, but I think that this is a stock that is definitely showing some relative strength. Amazon, again, holding up okay. It's above the 21-day. It's above the 50-day. It's above the 100 EMA. It's okay. Again, not actionable here. Looks like it's marking time going sideways. Low volume pullback tells me that no one's really aggressive here, but we could get a gap fill to the downside to around that 133 level. That wouldn't surprise me. Okay, Roku. Someone asked me about Roku in the forum today, and then Dan added it to his active trade list. I think it looks okay. Again, some pretty interesting relative strength versus the rest of the market here. So I think, if you're trading Roku, I think it's potentially actionable for a small amount, maybe a starter, and then you have a stop rate under Friday's intraday low. And then, okay, let's say I'm taking, I don't know what your number is. Let's say your full position is 100 shares. Okay, maybe I'm buying 25 shares here, and then I'm putting a stop right there. Okay, I'm risking $6. It's about $150. Okay, so I'm risking $150 to see if I'm right, to see if this can fix itself. Something along those lines. Something like that. So that's what I would do in terms of, how I would really kind of risk manage this. But I wouldn't be big here at all. The volume today, yeah, slight uptick, but still lower than average. Another one with decent relative strength yesterday was AMD. AMD, again, just kind of chopping sideways here, not really doing anything, but I am noting that it's holding up around that 100 EMA. Again, just looks like it's drifting. Not actionable here, pretty sloppy and choppy. Google, still going sideways. Dan mentioned this one on Cramer yesterday. We'll talk about Disney here in a minute. Spoiler alert, I'm on Team Dan. I think Google looks pretty good here. You can see this little bit of a downward sloping trend line. And if I delete this, you can see a bit of an upward sloping trend line, bit of a pinch and pop underway. But again, we don't know which way this pattern is going to break. It could break down. It could come back down to the 50-day moving average, or we get some news or some sort of positive catalyst for the market, and it breaks up to the upside. So while you're in consolidation, don't expect the stock to do anything different. And that's one of the things that really, it took me a while to kind of figure out, because a lot of times I'd be like, well, I expected the stock to go up, but it didn't. And why didn't it? Because it was just doing the same thing it was doing anyways. But now, I kind of had this thing where it's like, well, I bought it, so it should go up now, And so we can get into that sense. I wouldn't expect much of anything right now, unless we get a break to the upside coming on volume. Dick's Sporting Goods, they have earnings coming up next week, but this one looks interesting here. You can see how it's trying to come out of a little bit of a short base, testing some previous resistance zones. Delete that guy. Resistance, we're right underneath. And so even though I would classify this as a day 2 and you're kind of a bit late, watch for a day 3 above that 150 level on Dick's Sporting Goods. Okay, Monster Energy Drink also looking good here. Again, not actionable. A downside move today, lower than average volume. It looks like it's still in some consolidation. Delete that guy. I think we get. I think we want to see a bit of a break and a close. Right above that. Let me zoom in here. Yeah, right around 59.30. I would probably have an alert right around 59.30 and then look for that move coming on higher than average volume. I'll set an alert on my software. And if I see this come through, then I'll post it in the trading room. But again, it's above all the major moving averages. It may consolidate until September. School's back. University kids need that energy drink again. But this, this chart looks interesting because it is holding up really well. Okay, Disney. Wanted to cover this just because I know Dan talked about Disney on Kramer last night. Honestly, Jim, I'm sure is a great guy, but I'm on Team Dan here. I don't think you can own Disney here. I think that this looks sloppy and choppy, and I think whoever bought it, if they bought it, thinking earnings were going to do this, and the stock reversed, you got to sell. Market's telling you otherwise. You don't have to sell the first day. You can wait, and say, okay, I'll give it a day. If it fixes itself, great. If it doesn't, I got to be out. And so just wanted to highlight my support for Dan's idea here, where I don't think you can own Disney right now. Okay, really quick onto some building stocks. BLDR, talk about this one almost every day in the forum. Going sideways. It's still holding up okay in a sloppy market. So this is definitely one to keep an eye on. Earnings, not an issue right now. OC, I thought was going to break out today. It did look good at one point. It did trigger my alert right above that 143 level, but then it reversed quickly. You can see how it went up first hour of the day. I thought, oh, wow, OC's breaking out. And then it didn't follow through. So again, in consolidation, following the market, I think, probably just reset that alert to take out today's high, just about 50 cents higher at around 143.74. So that, I think, is a pretty important level here on the stock. Martin Marietta Materials, this is ticker MLM, still going sideways, not doing anything wrong. Again, it's a building stock, and it's holding up good. So I think that this is one worth watching. Okay, Coinbase, as I mentioned with some of the crypto stocks, I think you got to watch these in the event we do get a positive catalyst of some kind. It's tightening up. You get a bit of a wedge pattern here. Broadening pattern, tightening. It's at the 50-day moving average. It's at a level that you would hope institutions would come in and support the stock at. So far, not so much, but watch for a break out of this consolidation zone. Riot and Marathon, again, nothing really going on here. Closed below the 50-day. I think you got to go. And Riot, same thing. Closed under the 50-day. I think you got to go. If you haven't sold this already, I think you got to be out of these and just wait for them to reset. So that's all I got for you tonight. I hope that video is helpful. Just a note, I will be away Thursday. I'm flying back to Alberta on Thursday. And I can't wait to get home because I've been living out of a suitcase for 4 weeks. Okay, we'll see you tomorrow.